Ladies and gentlemen, good day, and welcome to the Bharat Financial Inclusion Limited Analyst Conference Call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone telephone. Please note that this conference is being recorded. I would now like to hand the conference over to Mr. M.R. Rao, CEO and MD, Bharat Financial Inclusion Limited. Thank you, and over to you, sir.
Thank you. Good morning, all. Thanks for taking time out to participate in this call. So let me begin straight away by diving into the operational highlights for the last quarter. We've had a fairly good quarter with a healthy customer acquisition of 10.5 lakhs as against 6.3 lakhs the previous year of Q2, and as of 10.6 lakhs in Q1 FY19, which basically tells us the customer acquisition has reached a steady state. Of course, in the next couple of quarters, we would see temporarily there might be a blip in customer acquisition because of the change in process on account of Aadhaar, which we will delve deeper later. But we expect to largely meet our guidance of customer acquisition as we set out in the beginning of the year. The loan disbursements grew by 13% QOQ and 64% year on year, and we disbursed about 7,049 crores for the quarter. Consequently, the gross loan portfolio grew by 46%, which is consistent with our medium-term guidance to 14,482 crores. Primarily driven by this customer acquisition and a marginal increase in ticket size of 16%, which is again consistent with what we have set out as a strategy of 40% growth, coming through 15% increase in ticket size and 25% increase in customer acquisition. Our collection efficiency continues to be robust at 99.6 for all loans disbursed post 1st January 2017. As we guided, we have expanded our operations into four new states: Tripura, Tamil Nadu, Gujarat, and Assam. But we are just getting our feet wet. We just about opened 8 branches in all these 4 states. Once we are comfortable there over the next 3 to 6 months, we will continue to expand the operations. The idea is by the end of the year, we should open another 40 branches in these 4 states. But that will be an extremely calibrated approach based on the experience that we have in the new states. On the financials, the marginal cost of borrowing is at 8.7% for Q2. The gross NPA and net NPA are at 0.4% and 0.1%. The PAT for Q2 is 233 crores as per Ind AS, and it was rupees 142 crores in Q1 FY19 and 134.5 crores in Q2 FY18. As per GAAP, the PAT for Q2 is 212 crores, as against 190 crores in Q1 FY19 and 119 crores in Q2 FY18. The cost to income is at 40% as per Ind AS, while as per GAAP it is 42.7%, which is a drop in our cost to income from the earlier 47%. So the efficiencies are kicking in, and we'll continue to have a laser sharp focus on efficiencies starting from the center level. This bears I mentioned the fact that we have a positive ALM mismatch for all intervals up to 1 year. Our assets maturity is about 6.5 months, while the liabilities maturity is 8 months. We have a comfortable cash position, and we have sanctions in hand to the tune of 2,500 crores, which we are planning to draw down as soon as possible. There's been a Supreme Court ruling on Aadhaar. While we moved to instant disbursals and using eKYC as a method of validation of customers, and that has stopped for the moment, we don't think this will impact the business too much, It's just that there will be a we were moving back to the manual process of collecting Aadhaars and validating the customer identification. So essentially, the disbursals will get pushed to by 1 week to the next week, which was what we were doing earlier before technology came into play. So we see just a postponement of business, but not a loss of business. However, we can continue to use the eKYC for all the branches where we are a business correspondent of IndusInd Bank, and that's about 309 branches, is about 20 lakh customers. We are working on solutions as an alternative to Aadhaar, and hopefully we should, in the next 1 month or so, be able to get technology into play to get back to instant disbursals, and also move towards paperless agreements, and that's been that's a work in progress, and that's what we are all working on currently. The eKYC has impacted the RDSP also, albeit for the time being. So the 1,500 RDSPs where we're doing cash in, cash out have temporarily stopped doing that activity. However, we've got clarification that we can use IndusInd Bank KUA, which is the licensing for eKYC validation, and we are shifting to their license, and we should resume the RDSP activities in the next 10 to 15 days. Most of you would have gone through the presentation that we uploaded last night, and you would have seen a drop in cross-sell units facilitated from 5.8 lakh units in Q1 FY19 to 3.9 lakhs units in Q2 FY19. This is also on account of the fact that we are transitioning from a process of delivery by of the products at the center meeting to a direct delivery to the customer's doorsteps. This transition is continuing to happen, and we are fixing the gaps in those processes. We expect the demand to come back once the process of direct delivery to the borrowers at their doorstep by the manufacturers starts happening seamlessly. Finally, on the merger, NCLT filing is done. We have got the verbal confirmation that we have to call for an EGM. We are awaiting for a written order, and as soon as we get that, we will keep everybody posted about the date of EGM. Most likely, it will be in the first week of December, the EGM. With that, I'll pause here and leave the floor open for FAQs. The entire senior management is here, so please feel free to ask questions on operations, finance, technology, process, or risk. And we have the HODs here to address those questions. Thank you all again for your time.
Thank you very much. Ladies and gentlemen, we will now begin the question-answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We will take the first question from the line of Manish Otswal from Nirmal Bang. Please go ahead.
Yes, sir. Thank you for the opportunity. My first question on this liquidity issue in the sector, NBFC sector and microfinance sector. So, do you see the competition ease out and we will be in a much better position in terms of pricing? Although we always were in better position, but now the competition will be further ease out in the segment. Or secondly, do you see the efficiency gains in terms of operating efficiency? Most of the gains captured and further improvement cost to asset ratio, cost to income ratio will not be there. So these are the two questions.
Yeah, I think given the huge demand-supply gap, we've been consistent in saying that competition, while it is there, it doesn't really play out as much as it plays in the normal urban financial or banking sector that you see, like let's say credit cards or car loans. I mean, and secondly, our presence is far more rural than most of the competitors. So while we'll have one or two players in the same village or same area that we are operating, it's not that all 17 players or 20 players are operating, barring a few branches where it's a dog-eat-dog world. So whether the liquidity crisis is impacting others or not, I think there was some report yesterday that some of the MFIs are heavily dependent on commercial papers. We don't know who they are. But we don't see this impacting negatively our operations. And secondly, we have always been saying that given the huge demand-supply gap, we have a capacity to grow even at 80 or 100%. But as a prudent growth strategy, we have always said we'll grow between 40 and 50%, partly based on marginal increase in ticket sizes and largely based on customer acquisition. And that I think is playing out in this fiscal year as well. And we'll give the floor to Ashish to explain more.
Hi, good morning. Basically, the efficiencies will continue to play, given that if you would have seen the numbers, we are still at around 616 Sangha managers per borrowers, which we over time would like to take it to 750. And you would see that happening as, the branches mature, the Sangha managers that we have added will continue to acquire customers. So this is going to continue to play out. Our customer acquisition has been very robust, and it will continue to be the case, and efficiencies will come. As far as liquidity is concerned, as MR explained, we are in a very strong position for two reasons. Primarily, we have a asset positive ALM mismatch, which is helping us. Our asset maturity is at 6.8 compared to liabilities maturities at 8 months on an average basis. And given PSL, we have been continuing to borrow from the banks, and we have no exposure on capital market pieces. So we are in a very good shape here.
And lastly, sir, secondly, we are creating a non-MFI book also to cross-sell to our existing large customer base. So over the 3 to 4 years, what kind of size of book we can build over there?
Rather than looking at the book, the way we are looking at is, we are actually offering products, facilitating purchase of products which meet the basic needs of the borrowers. A solar lamp, a mobile phone, water purifier, or a bicycle, or even a two-wheeler. For us, the center-wise, as I was alluding to in my thing, what is the offtake per center is far more important. So then, what is the number or book we give? And these are all purely voluntary. Today, if you look at the cross-sell products on the whole, we are running at an average of 0.57 per center, which we think is, just the tip of the iceberg. The effort, and we are driving a quality enhancement program across the country in the next few months, where ensuring that the members are aware that we are funding other products also becomes a priority. We expect this to go up gradually over a period of time. And in the long term, 2 to 3 years, we would want every center. Today we have 3 lakh centers. There's one product at least to be purchased or financed by us every month. So the number should go up from 0.57 to 1, which is effectively doubling the number of units facilitated. There's not going to be too much impact on the book because these are mostly 25-week repayment products. except for a housing loan or a two-wheeler loan, which is a 2-year to 5-year repayment product.
So basically, our overall strategy is our aspiration is to get to maximum of 5% of our book in the cross-sell business, which should give us 10% in revenues and 15% in terms of earnings. That's the way we look at it.
Sure. Thank you very much. Thank you.
Thank you. Before we take the next question, I would like to remind all participants, if you wish to ask a question, you may press star then 1 on your touchtone telephone. Next question is from the line of Kunal Shah from Edelweiss. Please go ahead.
Yeah, congratulations. Great set of numbers. Firstly, in terms of the ticket size, if you look at the quarter-on-quarter, particularly on the disbursements, so there's been almost like 15% kind of an upside in ticket size after having been almost like flat for last 3 odd quarters. So anything specific to read into it, and is it more structural and we should see the ticket sizes moving up? It's now almost like 25,000 rupees.
See Kunal, if you refer to slide 46 on the ticket size, if you see there, yes, offtake has gone up 15% quarter-on-quarter, but that's primarily because the number of cross-sell units have gone down, as we explained at the beginning of the call. What happens is the cross-sell, what we finance, just mobile phones, solar and etc., the average ticket size is around 2,000, 2,500 rupees. And if those actually come down, then actually it impacts the ticket size looks a little higher. If you exclude the cross-sell on a QOQ basis, you will see a 6% increase in the ticket size. On a annualized basis, which is on a YY basis, actually that number is 16% YY.
Okay. So in terms of the cross-sell, so now it is getting so cross-sell in terms of mobile phones and all is lower. So is it like it's getting replaced by MFI or something? So that is what you are trying to say?
So what we are doing is the earlier process was that some of the projects were being delivered. In fact, all the projects were being delivered to the center meeting by our staff. Some of the things like sewing machines where people used to come to the branch and pick up those products. So what we have done is we have told the manufacturers that it's their responsibility to deliver the products to the customer's doorstep, and so they are tied up with third-party vendors to do this. So there's a transition process which is happening as we speak. So we expect it to close by December 31st of this financial year. And I think what you will see probably Q4 will be a normal quarter.
Okay. So then ticket size should again come back to 22, 23, or it should be in this range? How should we look at this?
So ticket size, if you exclude cross-sell, is about 28,000. But more importantly, outstanding per borrower is about 22,000 rupees.
Yeah.
Now, again, if your question is how is it compared to the other MFI players, I think we are still on the lower side of the curve.
Yeah, definitely. And maybe again in this operating environment, do we see the number of players indebted with a customer coming off, and that should ideally lead to some kind of an increase in ticket size over next 1.5 years? So maybe today when you look at it, each MFI customer has 2 to maybe 3 odd loans, even if we include some of the non-MFI's lender. So then do we see it going away, at least in some of few of the regional players?
There will be a marginal impact, I think, because we think this liquidity crunch that we are facing will phase out over a period of time. Difficult to predict how long and stuff like that. But as I said, given the huge demand-supply gap, there's not going to be too much of upside or too much of downside, because we know that there's today also the liquidity crisis with notwithstanding, even 6 months back we could grow at 80% if we choose to, because of the huge demand-supply gap. We have deliberately pegged our growth rates between 40 and 50% based on the fact that we should acquire 25 to 30% new customers every year, and a marginal increase in ticket size of 10 to 15% as customers graduate from one cycle to the other. That's been the strategy, and that will going to continue to play out. Ashish Pipali will add more color.
So if you go to slide 54, Kunal, what we've given the industry data. This is from Equifax. So this is Equifax State Bureau. So what they tell us basically about 98% of the customers have an indebtedness of less than 1 lakh rupees. And so 1 lakh is basically, as you would know, RBI limit on indebtedness at a customer level. What MPIN follows is about 60,000 rupees. If you take 60,000 also, that number is 90%. So 90% of the customers are below 60,000 rupees limit.
Yeah, no, so overall they are below limit, but the only thing is today it is distributed amongst the finances and now it would get consolidated amongst the top. So would that happen? Yeah. So that's the only question. And maybe okay, so that's and when since we have a significant chunk coming in, say from the term loans from banks, when we are approaching today banks, are we seeing any kind of a stance from banks in terms of maybe reevaluating their NBFC book and thereafter maybe not? So you clearly highlighted that you are planning to draw down the sanctions of 2,500 odd crores. But is there like we are getting it as fast as it used to be prior to this entire liquidity situation, or banks are taking time in terms of disbursals?
So we out of the amount which MR mentioned, we've already drawn 1,275 crores, and a new pipeline has also been built. So while there is a relook of a strategy from the bank side, I think it will be primarily for players who have relatively, let's say, less strong balance sheet. We have a good track record behind us. We have very strong balance sheet, and so we have not seen any impact. Of course, the pricing in the current market will be slightly different. So that is where we will have to, keep evaluating. But otherwise, there is, it is not as freely available as what you would have seen in, let's say, Q1 or early part of Q2. But yes, we are adequate.
Even for stronger players like us, it is not like so freely or maybe not timely as such.
So timing is not an issue. Like I said, we are well planned. We are not having any challenge in terms of the planned funding. But yes, the pipeline which used to be very thick, that has come down a bit, I guess.
Just to add, Kunal, if you see the off-balance sheet funding is basically we have business correspondent, we have securitization, we have assignment. That is about 40% of our funding. So that is actually, that's flowing in because banks still have target.
Yeah, so I'm very comfortable with BaFin. Just wanted to get in terms of how banks are looking, even the stronger entities like BaFin. So that was the only question. I think maybe for us it is still comfortable, but just want to get the sense in terms of how banks are looking at it. Okay, cool. Yeah, thanks a lot, and all the best.
Thank you.
Thank you. Before we take the next question, a reminder to the participants, if you wish to ask a question, you may press star then 1. Next question is from the line of Nishin Chavate from Kotak Securities. Please go ahead.
Hi. Amar, you mentioned about a change in process that you are doing in terms of delivering of products from customer to customer doorstep from center meetings. Just trying to understand as to what is driving this change.
No, basically, I think one is to free up the Sangam manager or the loan officer from doing what he should do. That's his core competency is to give loans and collect installments. And we don't see any value add in the whole inventory being handled by us or delivered by the loan officer. And we think it's more efficient for the manufacturer to get an order online, and since we are most of the business is managed through technology, we administer through technology. And so therefore, we manufacturers have also realized that it's better to deliver directly. Second, once you take this non-productive piece of it, the loan officer will be able to offer, announce more products in the center. Plus, we can offer a bouquet of products for the same thing. For example, mobile, we are tied up with 2 manufacturers instead of 1 manufacturer. So we are also giving a choice to the customer instead of burdening the loan officer with the process of delivery and so on and so forth.
Let me ask this a little differently. Have you seen the attendance in branch meetings going down?
No, we have not seen. I don't think manufacturer delivery and shifting the burden of the loan officer and it has anything to do with attendance. It has to do more with efficiencies. The attendance continues to be as it was in the last 2-3 years, which is typically around 70 to 80%. Because we also have tight processes and rules for loans. That if there is no minimum attendance in the center meeting or the group doesn't have the requisite attendance, we don't disburse loans. We're pretty tough on these things. That is the reason there is a far more discipline in our center meetings than what you would encounter with other players.
The other thing is, on the Aadhaar process, maybe, I'm not fully on the top of this, so if you could just explain as to what needs to change and, how are you really coping up with, maybe, just starting from the basics.
So my colleague, Ritesh Edaviji, will take this question.
Yeah, hi, Ritesh here. Can you hear me?
Yeah, very clear.
Okay, so basically on Aadhaar, it's been a gradual journey where we have changed started the use of Aadhaar as in line with the industry process. And as like other MFIs, we've converted almost everyone. We are using the KYC as Aadhaar, and it remains a voluntary use. So that is the first point. So we have not made it mandatory. Second is we started using the authentication services where we could use the eKYC details, which is a substitute for data entry. So it makes the process more efficient. And the second one we were using was identification for existing clients. So we were using eKYC for enrolling new clients, but for existing clients we were using an additional, verification service. Now, basis the fact that we are not allowed to use only authentication services, so Aadhaar remains one of the IDs which we use on a voluntary basis. So there's no change in that policy. Second is the authentication services are replaced by our normal verification process, which we were following until quite recently before we switched over to these services.
Which is?
So
the manual process, as in what it is exactly?
It is the paper-based where there are 2 parts of the manual process. One is we do the QR code as a substitute for data entry at enrollment of a new client. So that's a substitute for that. And UID has also recommended the QR code to be used extensively for everyone. Secondly is the normal, we take the KYC proof during the application process for verification. So that for existing clients, we don't need to again verify because we already have a verified ID. So the main verification is in terms of slight increase in the time only at the enrollment stage. For existing clients, we don't see much impact on the time taken to process a transaction.
Sure. And just finally on the timelines of the merger, what time are we really, when are we really looking at the merger to finally be, completed?
So, we are awaiting, as I said, the NCLT order. The judge mentioned that he is approving the calling of EGM. Based on whether we receive the order today or tomorrow, the dates might change by a day or two. But we are confident that this EGM will be called in the first week of December. Once that is done, I think it's a 2 month of paperwork, it's a formality. So we should expect the merger to be done by March or so.
Sure. And just looking at a hypothetical scenario in case, the merger doesn't go through for whatever reasons, then is there any breakup fee that has to be paid?
So there's no breakup fee envisaged. If the merger gets delayed, it gets delayed. We'll continue to do what we are doing, continue to have investor calls every quarter, and continue to deliver good results.
Yes, sure.
That's what we paid for.
And just one thing, very basic question. How does it work in terms of, in case of BaFin and IIB both, in terms of percentage of votes needed for the merger to go through?
Sorry, come again?
For both BaFin and IIB, in terms of what is the extent of percentage of votes that are required for the deal to go through?
I think this is a special resolution. So normally it is 75% or 76% because that's the way it is. But that is also dependent on how many people are voting, how many people are attending, and so on and so forth.
And the promoters of IndusInd can vote, is it?
Yeah. Everybody can vote. All shareholders can vote.
Okay. Sure. Great. Thank you very much and all the best.
Thanks.
Thank you. We will take the next question from the line of Kashyap Saveri from Emkay Global. Please go ahead.
Thank you very much for the opportunity, sir. With respect to one of the earlier questions, going back to slide number 54, where you have presented the Equifax data. Now, if I look at this chart, which is on the left-hand side top, there are four lenders, percentage of borrower which is at 3%. And, I'll also look at, let's say, percentage of borrower where indebtedness is more than 100,000 odd rupees. Now, if I look at the collection efficiency ratio that, MFIs have posted historically above 99%, any continuance of this 3% in terms of total number of lenders at 4 or probably people having indebtedness more than 100,000 odd rupees, can that 99% plus collection efficiency ratio in future get probably lower at about 97, 98? Is that possibility?
See, I think when we're talking about 99% at industry level, that's a very average number. This includes one lender, two lender, three lender, four lender, everyone. We don't have specific data on what is the default ratio, percentage on the customers who have taken money from four lenders. As of now, as we see today, that's a very small number, 3%. So it does not really move the needle on a overall basis. So we don't see any. See this. I think also what are the RBI regulations? RBI regulations says that a customer cannot borrow from more than 2 MFIs. Okay. So then, but we also have banks coming in, SFBs coming in to the foray now in the last 2-3 years. So we've seen people, having two MFIs plus one loan from a bank. And but there is no change or no impact on the credit quality because if you look at the ticket sizes, the average ticket size for the industry is about 22,000 rupees. So and even somebody taking money from three lenders, we're talking about 60,000 rupees overall outstanding per customer. So which is within the limit of that 1 lakh rupees which RBI defines. So I think it's very much within that. So we don't see any issues in terms of customer default, because of two lenders or three lenders.
So you don't foresee any chances that 0.5% to 1% credit cost, across probably last, including demon and everything, that's got chance to getting into about 1.5% to 2% for the industry level as such.
So as far as we are concerned, we have a very tight policy. We have 2 MFI and we actually for ideal one for the first customers we just follow the 2 MFI rule, and for the customers who are from cycle 2 onwards we follow the 3 lender norm, which is 2 MFIs plus one entity which is a bank. And we've not seen any deterioration in the credit quality after this change also. And so we can speak about ourselves industry level thing, something which we don't know how other players are operating because we have very differentiated model. If you see the entire industry and if you look at us, we are the only ones who follow the weekly collection model among MFIs. So if you talk to credit bureau, you will understand that between the weekly and the monthly model, there is some difference in credit quality. The weekly model it turns out to be better.
Just to add, even first cycle we looked at only 60,000 as a limit, not 80,000.
Okay. Thank you, sir.
Thank you. This is a reminder to all the participants in the conference. If you wish to ask a question, you may press star then 1 on your touchtone telephone. We will take the next question from the line of Nikesh Parekh from Goldman Sachs. Please go ahead.
Yeah, hi, this is Nilesh. Just coming back to the Aadhaar issue. The understanding that we had was it was also helping in terms of authenticating and, the duplication which was actually prevalent earlier. Now, if we go back to the old practice, I'm just, here I'm actually talking about the industry, maybe not specific to you guys, but, do you think that issue again crops up in terms of, multiple loans being given with the different IDs? You think it kind of creates that kind of uncertainty?
I think I think what we're talking about, we just break this into two parts. One is existing customers and second is new customers. Existing customers which have already onboarded, about 80 lakh customers, we have already onboarded. We don't have to do a eKYC again for them. We have already onboarded. We can give them the incremental loans, the top-up loans. The new customers, which is about 25-30% of our loans going forward, for that we are moving from an instant authentication process to a paper-based process. So when we say paper-based process, we are still paying Aadhaar as an ID proof, and we then basically validate that Aadhaar and the giveaway loan. So basically, only for the new customers, we're talking about changing the process. In fact, there is a discussion with IndusInd Bank as well for the BC branches where a bank is allowed to basically authenticate the customer. So what we are trying to do is if we can open a savings account for these customers, for these new customers, and also give a loan. Then for savings account, authentication is allowed, so we can use that service. We can authenticate the customers and then give the loan on basis of that. Rikesh will add more to Rikesh.
Sure.
No, so your basic question is, are we moving away from Aadhaar? We are not. So the dedupe and the population of Aadhaar continues on a voluntary basis. So generally, because today it has become the most convenient KYC to upfront give it, so customers are voluntarily giving Aadhaar. So they'll continue to give it unless they insist on giving some other ID.
Okay, but if they give say another form of ID, which obviously they would be also giving out, in terms of the process, does it actually change materially for us? Like in terms of the time taken or the in terms of the intensity of the process for identification and all that. Yeah.
No, see, the thing is, you must remember that this is still a recent phenomenon. 3 years back, the industry has, MFIs have moved to mandatory 2 IDs minimum. So that is what we've been taking. So our database is populated with 100% voter ID as well as Aadhaar. For the entire MFI database, it's more than 80% of the credit bureau data is populated with these IDs. So we are comfortable with that, and even so CB quality also doesn't change. So generally nothing changes. It is only the more convenient method of getting the data, demographic data, only that stops. Otherwise, it's all the same.
Okay. Great. Thanks. Yeah, thanks.
Thank you. This is a reminder to all the participants in the conference. If you wish to ask a question, you may press star then 1 on your touchtone telephone. Next question is from the line of Nischint Chawathe from Kotak Securities. Please go ahead.
Just to follow up on the Aadhaar part, and I guess this is more a thought process, what the industry, I just want to understand the thought process that the industry is following. In a scenario where a customer sort of refuses to, submit Aadhaar, and I believe, the proportion would be very less, but still if he does, then what really happens? Is the pricing different or, how, and obviously in terms of KYC convenience, it's going to change things. So what are the industry thought process around this?
No, we can't speak about the industry. For ourselves, I think we'll be constrained to do a bit more deduping checks and so on and so forth, that there's no repetition. So instead of giving a loan in a week, probably we might take 2 weeks, because the process of trying to validate a voter ID and doing dedupe will be a bit more tedious than it would be based on an Aadhaar number.
The pricing may not be different.
No, it's difficult to have differential pricing in this segment at a center level.
Sure. And currently within the industry, Aadhaar would be like what proportion?
It's on more than 95%.
Okay, great. Okay. Thank you very much.
Thank you. Next question is from the line of Prashant Shah from Macquarie. Please go ahead.
Hi. Just any qualitative color you can give on the new states that you're entering into. What is the competition there like, and what's giving us the courage to, or what's giving us the interest to enter into these states?
No, one is basically there's a huge demand supply gap in almost all the states. It's too early to give a color on these states. But this has been for quite some time post MFI crisis and our consolidation. We have not ventured into new states. And we thought this is a good time, given that the merger is also around the corner, for us to expand our footprints into 4 more new states. But we'll be very slow and deliberate about our expansion plan because we want to get very comfortable with the customer behavior, which is typically actually uniform across the country in terms of center attendance or the payment discipline. But given that it is a new state, we need to get the correct staff who know the local language, local culture. That's going to take some time. Currently, it is too premature to talk about any insights into these specific states.
Fair enough. Thank you.
Thank you. Well, ladies and gentlemen, this seems to be the last question for today. I would now like to hand the conference over to Mr. M.R. Rao for his closing comments.
No, nothing much. Thank you for your time, and we'll keep you updated as soon as we get some news from NCS. Thank you so much.
Thank you very much. Ladies and gentlemen, on behalf of Bharat Financial Inclusion Limited, we conclude today's conference. Thank you all for joining us. You may disconnect your lines now.